Hello, it is Scott Newcomb with Zenby AI, and welcome to the Systems Are Sexy podcast. Today, I am joined by John Keeney. He's the founder of the Central Penn Group. He's scaled from flipping houses to owning and operating storage sites across several states, all with a lean team and a systems first mindset. In this episode, we're going to unpack how John's running multiple state operations remotely, what's happening in the self-storage market right now, and where he sees the biggest opportunities for automation. So welcome to the show, John. How we doing?
Thanks, Scott. Yeah, no, appreciate you having me. Doing well.
Yeah, let's kind of start there at the beginning, get into kind of your journey. Obviously, you started with single family investing in multi-state storage. Kind of what's been the hardest part to systematize? Like how have you scaled those businesses like that?
Yeah, so got in initially when I kind of changed careers and went into real estate full time. First kind of started flipping houses, and did that for a number of years, and then more recently transitioned to self-storage as more of a focus. But with flipping houses, I think the main driver was finding off-market deals at the time. It was 2015 is when I started really doing it full time. So about 10 years ago. And deals at that point were just harder and harder to find. It used to be that you could go on the MLS and buy deals pretty easily that way. But, as I was getting into the business, it was hard to make the numbers work on those. It's still difficult on a lot of them today. So I really started going after off-market deals. And at the time it was, had various systems for direct mail, for online lead gen, both through, kind of the evergreen style of SEO marketing where, you're just kind of continuing to build the online presence. And then also with Google AdWords, I've done cold calling, I've done texting, I've done pretty much everything kind of in that business. And, over the years discovered that, that was a pretty time intensive business and had some other folks that I knew that were kind of mentors to me that were also in real estate, and one in particular who was in self-storage and told me about how great of a business it was. And so I started learning more about that, and kind of came into it. I had gotten pretty good at marketing for off-market deals. And so I decided that I was going to try and take that into the self-storage space. So that's kind of how I got into it. Find mom and pop type owners, that had been in the business for a while, not necessarily distressed sellers in the same way that we're often looking for them in the residential space, but folks that were just ready to move on. And a lot of them have very antiquated systems, and also have some bookkeeping challenges, may not have been keeping their books the way that they should have been, or that maybe even that the IRS would have liked them to. And so coming into those situations, trying to get the records back on track with larger, more sophisticated commercial real estate deals. Most buyers are coming in expecting good books, right? So that is something that, some of these storage operators that we were buying from, they weren't as good of candidates maybe to bring their deals to market for, more conventional commercial buyers because they just didn't have those systems or those books in place. So that's kind of one of the ways that we bought value and continue to buy value and some of those ways these days as we look for more deals.
Yeah, I'm curious, kind of the market for self storage. I feel like it kind of boomed in pandemic, and it's become kind of one of those hotspot opportunities. Some larger companies are coming downstream. Have you noticed more competition or tightening capital? Has anything changed you noticed in the last, let's say, 5 years?
Yeah, absolutely. I think when I first got into the business, it was a little bit before COVID, but not long. The difference as far as just, again, the institutional money coming into storage has been night and day. Storage at some point has gotten this reputation that I'm not really sure is like fully founded, because I think some of the elements were different at the time, but where it did well in the '08 financial downturn. So it was seen as being recession resistant. I think some of that had to do with the fact that kind of prior to that, and even in the early aughts, self-storage, as I've been told, was not nearly as easy to finance. The banks didn't love it. And so oftentimes folks that were owning those kinds of assets or buying those assets were having to come in with more cash, bring a lot more cash to the table. So that kept LTVs lower. And so when some of these, when some of the market shifts happened, there wasn't a whole lot of stress as far as the debt was concerned with those assets. So I think it kind of got this reputation that it was recession resistant because people were in good equity positions with these assets. And so they weren't seeing the same kind of stress. And the market kind of ran with that narrative. And so everybody was scrambling to get into storage because it was seen as being a really, rock solid asset, as I think a lot of folks have been kind of waiting for the ball to drop, especially post COVID, and weren't really sure when we were going to see ourselves in recession, and what that was going to look like. So a lot of folks kind of trying to get their assets in that market. So yeah, it's gotten a lot more competitive, both big money and guys kind of like me that are, maybe they were flippers or they were in real estate in another way. They were trying to buy apartment buildings, which have been very difficult to buy and make financially viable as well. And so I think there are, smaller guys that are, like ourselves, that are leaning on technology to make this business viable and kind of bring it into the 21st.
I get that. Switching to marketing the properties, I know you mentioned that. How are you guys finding new tenants and keeping occupancy stable?
Yeah. So for us, for the most part, and you may know this, but some of the other folks may not, but with self storage specifically, you're normally looking at a small ring. People aren't, for the most part, driving 10 miles to go find a self storage facility. So what we really look at is a 1 mile, a 3 mile, and a 5 mile ring. And we own some that are in more rural type markets. So we might look at like an 8 mile ring or something like that. But that is really your sphere. So that's your competitors are in that sphere, your clients are in that sphere, everybody is in that pretty small area. So it makes it easy and much easier than some other businesses to target because, again, I'm looking at a very, very specific area. So we have done this is a hot topic right now in self-storage because there's been, kind of getting back to the previous point, there's been a lot of overbuilding that's happened in a lot of these more primary markets. And so people are scrambling and trying to get the same customers and are doing a lot of that through promotions. Obviously, AdWords are a big deal. You're trying to find anybody that is remotely searching or thinking about searching for storage. And then you're also, doing very, very aggressive promos in a lot of these markets. We've been fortunate to be owning facilities, again, I guess for better or for worse, but in more tertiary markets that don't have the same kind of competitors, A, and B, don't have the same level of sophistication typically around our competitors. So, it's been easier for us just based on our 5 to 8 mile rings and, throughout the Southeast and Pennsylvania here to compete pretty effectively with few dollars. So we focus on Google reviews, our Google My Business, whatever they call it these days, is kind of our center of everything. So we make sure that is, firing on all cylinders, clean, updated. We continue to update those to stay, at the top of maps. Our reviews are something that we focus on in a pretty big way of doing, drip and follow up with customers, reaching out for, reviews and feedback. And then we also do some AdWords at most of our locations. And in some cases, it's not areas that we would especially need to, but the cost a lot of times to market in those areas is so small in comparison, especially to the we buy houses type marketing where you're spending hundreds sometimes on clicks. These you're spending, a few cents on clicks. So it makes it a no-brainer to have that kind of running all the time, even if somebody would find you otherwise, to make sure that they're finding you. So that's been our strategy. We've been fortunate, while a lot of the industry is struggling and really kind of eating each other, we've been pretty fortunate to not be, I don't think we're cannibalizing our competitors a whole lot. And I think we've still stayed fairly well occupied. I think what we're starting to see a little bit is some delinquencies that I think might be a little bit of a canary in the coal mine for the economy. But yeah, that's kind of what we're seeing in our facilities.
Okay. You had mentioned about finding off-market deals. I'm curious, like, what's the hardest part of that right now as you go through that process?
Yeah. So, I mean, we had started, and a key part of my, marketing both for the house business and storage had been letters previously, personalized letters, but physical letters, trying to really serve that up to this demographic as well. Because normally we're looking to buy from people that might be between 60 and 80 or so. And so they are still a demographic that likes a physical letter. We still have folks that hold on to those physical letters for months, sometimes years, and we'll get a call back on those. So that has been a strategy for us. It has, I would say, faded as far as its effectiveness a little bit. I think still, specific ongoing letter campaigns that are personalized can be effective, but I think the more generic ones in storage are just not very effective. So we have also gone to doing some cold outreach, cold calling owners, and trying to kind of just build these relationships. These are not a, hey, are you ready to sell today kind of call. It's an introduction call, making sure that folks understand who we are, what we do, and the fact that we're in the business for the long term. So again, if now is not the right time for them to sell their property, we very much believe we'll be buying properties in 1 year, 3 years, 5 years, and beyond from now. So, when the time's right, the goal has just been to kind of keep that conversation moving. So those are the primary ways that we're finding off market deals. We've actually gotten a couple. Again, not sure if you're familiar with the idea of wholesaling, but folks that are kind of getting these properties under contract off market and then are assigning the contract to another company or individual that's actually closing the deal. So we've gotten a couple of those as well from folks that are also doing kind of direct outreach. So we try and keep our radar up, I guess, for any potentially viable avenues that deals might flow in from. But I would say those three have been the most successful for us.
So obviously, you guys have managing multiple sites, and I know that can be a challenge with some people. It sounds like you automated. Is there any part of the process with that still feels too hands-on?
Yeah, I mean, I think the one thing that we can't really automate is we call it our boots on the ground position. So we still have somebody that's out on site who we need to be there to do the maintenance tasks, the overlock tasks, clearing out and cleaning out units, those kinds of just ongoing monthly type tasks. So I would say that's more of the challenge than anything. I think, the rest of the business has been I don't want to say easy to systematize, but just the tools and technology that's available now really makes it pretty straightforward and pretty easy if you build out the right systems. But there is always going to be that need for somebody there, for eyes there, and hands there to do the tasks that we need. And so that's still I would say, the biggest challenge that we're dealing with on a weekly basis.
Got it. Yeah, I know. I think we spoke earlier. You talked about that you have a call center, and I'm curious, how does that work with tenant communication and like, I guess maybe like for someone that's interested in getting into self storage, like what are the strengths and the gaps with having a call center?
Yeah, so we've had a few different call centers. Some of them have been very strong, some of them have not. Just like anything else, I think, really need to make sure that they're invested in you as a business owner. No one's ever going to care about your business as much as you do, right? But finding somebody that believes in building the relationship, and sees the value in the portfolio of business that we bring, I think has been really important. Also, people that get it. I think there are some call centers that have less storage experience and they're just trying to provide the service. I think people that really understand what it takes to operate storage are obviously much better and more capable at doing what needs to be done, and kind of handling some of the questions that maybe the call center reps would have in-house. So, if you have pretty clear directions, as an example, self-storage is a business that has a number of fees. So there's late fees and there's, if somebody doesn't pay, basically the unit will go through a lien sale process that ends in an auction if they still don't pay. And there are fees along the way that cover the various tasks that need to happen at those points, whether it's cutting locks, whether it's inventorying the unit, whatever it is. And in addition to late fees. And I think a lot of operators are much more lenient with their fees if a customer is to ask. We are not, and we believe it's part of, training the customer to just understand what we expect. And we're we do our best to be very respectful and understanding of our customers, but also, it's a business relationship, and we also do our best to kind of draw those lines. And so to have a call center that understands where our line is so that they're not coming to us all the time to try and override a late fee or, whatever the case is, has been really important. So again, I think people that understand the business, and yeah, I mean, I think the call center is always going to be your front facing side. So if it's not good, the business is definitely going to suffer. But we do have a number of other ways that we try and do outreach. We have a lot of automated emails that go out through our management system. We have a lot of automated text messages. People are being reminded that they're late, or that their overlock is going to happen in a couple days, or whatever the case is. So there's a ton of communication, and the software also has two-way text capability as well. So the call center is handling those texts. I think being able to enable your customer to communicate kind of on their terms, these days is really important. And so that's important to us, and kind of our call center solution as well.
Have you guys ever experimented with like AI, voice, or chat tools for handling inquiries?
Yeah, it's a good question. So we have certainly gotten some demos, and I think we were talking about this a little bit earlier, but it feels like quarterly, if not monthly, the AI call tools are just getting better and better. When we hear some of these demos, self-storage is such a simple business in a lot of cases that there's probably, I would say 95% of inquiries are one of maybe 10 questions, that folks are coming in with, or clarifications or whatever. And so I feel like it's really, really primed for that kind of AI automation. The rub on the back end is, the limitations around certain management softwares, their abilities to connect with some of the other softwares through APIs. And that's something that has been a challenge for us. So I definitely see it as, where the business is headed. I definitely think that self-storage is really, really primed for a lot of use of AI agents, but we have not been getting into it too heavily just based on some of the other constraints we have currently, and the fact that the system is working and still relatively cost effective. But yeah, short answer is absolutely see that in the next 2 to 5 years for us.
Okay. What trends are you watching in self storage? Are you seeing like more like automation, demand shifts, consolidation? You notice any of those right now?
Yeah, I mean, automation is a big one. I think self-storage, again, is such an old school kind of industry. There's a lot of folks, even large operators with large facilities, that just have this idea that, you know, they need to talk to people. There has to be somebody at the desk to really ensure that, that full tenant experience. I think sometimes it can be helpful, but I think we are seeing a lot of creative ways in the market now that folks are tackling that. And so for us, it's the as being a small operator, it's the call center, the ability to text back and forth, those kinds of things. There's a company called 10 Federal out of North Carolina that has really been on the cutting edge of tenantless self-storage facilities. We use their lock system called Da Vinci locks for ours, but they take it to a totally different level. I mean, they have drones that they're flying for facility, to watch their facility, and then it's being, they're using AI to go over the video to identify things that are out of place. Maybe somebody left a mattress out. Maybe somebody is, there's a car that's there for too long. So they're getting, using that between their surveillance systems and this drone footage to do some really impressive stuff. They also have, for a time in self-storage, there were these kiosks that everybody thought was really going to be the future. And so a lot of facilities put them in. I think there were some pluses to those things, but 10 Federal has kind of adopted basically putting in TVs in a small room at their facility, like an office style room with a camera on it. There's a sensor when you walk in that tells them that there's somebody in the office, and the screen pops on, and there's an agent on video from North Carolina, and you might be in a facility in Tennessee that's there to walk you through the rental process, to help you with anything you need. And so I think they're doing some incredible things with it. Um, and I really think that's kind of where things are headed. I mean, they're able to keep so much less staff because there's just so much downtime typically in a self-storage office manager's day, that they're able to keep much less staff, and keep really A plus staff, really A plus talent that's going to serve their entire customer base. So yeah, they're doing some really cool stuff. But yeah, that's what I'm seeing. I think other of the kind of more old school or larger operators, I would be very surprised if they don't start trying to emulate those kinds of things in the coming years here.
Let's say somebody's interested in getting into self storage. Maybe they come from a real estate background. What advice would you give to that kind of person?
That's a good question. I think it's definitely there's a learning curve. I think it is still a little bit of a challenging time to get into self-storage. In a lot of cases, the dollars are a little bit bigger. You're having to build out new systems. I think it's still very doable. I think, if there's somebody that that is in the space, I think getting a mentor in this kind of business is really a key. Commercial real estate in general is kind of so specific to the various asset classes around commercial real estate, or industrial real estate. And so there's not really a one size fits all. I think finding somebody that knows the self-storage business well, I think is a big one. So that would be my advice. I think it's also difficult. I think there's some temptation to really start small because that's normally what you do. And there's always very small self-storage facilities that might be, 20 or 30 units. And I think it's tempting to try and get one of those. But the economies of scale just can never work out. So if it happens to be, a mile down the road from your house and you're okay with going out and sweeping out units and just kind of learning, I think that can be okay. But for a remote structure like we have, it would just never be large enough for us to have a facility of that size, 2 states away or whatever it is. So I think they can be tempting just because of the lower price points and the lower barrier to entry, but I would kind of caution against that too.
So, if people want to learn more about you and your company, what's the best way to go about doing that?
Yeah, I mean, feel free to look me up on LinkedIn, John Keeney on LinkedIn. Quick Lock Storage is our self-storage company, so quicklockstorage.com is also a place to find us. But yeah, LinkedIn's probably the right place.
Awesome. But John, we really appreciate your time today.
Yeah, well, thanks so much for having me.